Hi everyone, today we will be presenting about KPJ Healthcare Performance Analysis. Meet our team members. Background of KPJ Healthcare. KPJ Healthcare Berhad, KPJ, or the group, is Malaysia's leading provider of private healthcare services. Vision, the preferred healthcare provider. Mission, deliver quality healthcare services.
First one for the analysis is liquidity ratios. Based on the chart shows the current ratio for 3 consecutive years, that is 2020, 2021, 2022. For the year 2020, having a current ratio of 0.86 suggests that the company had a relatively healthy liquidity position in 2020. Based on the calculations we have made, we identify the year 2020 as the year with the highest quick ratio, which is 0.74 times. While the quick ratio in 2021 is 0.51 times and in 2022 is 0.68. Efficiency ratios. Based on the chart, KPJ Healthcare's average collection period shows that KPJ Healthcare's effectiveness and efficiency are in extending credit and collecting debts. The shorter the ratio, the faster the debtors are paying their accounts and the more efficient the firm is in debtor collection. The chart shows KPJ Healthcare's inventory turnover, which indicates how many times the inventory is sold and replaced in 1 year. The higher the ratio, the faster the inventory is being sold. The chart shows the total asset turnover of KPJ Healthcare. This ratio measures the firm's efficiency in utilizing its total assets to generate sales. The lower ratio indicates that a firm should increase its sales or that some assets may need to be disposed of. A firm should try to increase its production so that its assets are used more efficiently. Based on the chart, showing the chart for fixed asset turnover for KPJ Healthcare, this ratio measures the firm's efficiency in utilizing its property, plant, and equipment to generate sales. The lower ratio indicates that a firm should increase its sales or that some assets may need to be disposed of. The chart indicates KPJ Healthcare's the debt ratios during a 3-year period. From the debt ratios chart above, we can see that the highest percentage within 3 years period is from year 2022. KPJ Healthcare's higher debt ratios in 2022 demonstrates that it is more efficient at help investor to determine a company's financial position. Based on the debt to equity ratios chart, we can identify that the most amount of equity in a 3-year period is in 2022, which is as much as RM2, 354,218. The amount of equity in 2020 is as much as RM2, 202,212, and in 2021 as much as RM2, 250,508. Based on the chart, it shows the time interest earned through 3 years, namely in 2020, 2021, and 2022.
The chart above shows the gross profit margin for KPJ Healthcare for the years 2020, 2021, and 2022. As is known, gross profit margin is one of the important things, for it measures how efficiently a firm uses its materials and labor to produce and sell products profitably. The higher the ratio indicates the firm doing well on its cost of goods sold. In 2020, we can see the gross profit margin position at 60.4%, which is more than the 50% gross margin that was estimated before, while in 2021, it shows a decrease to 57.7%, which is a 2.7% difference from 2020. This can show that the decrease is due to the fall in sales of KPJ Healthcare, but in 2022, it increased by 9.1%, which is 66.8% much higher than in 2021 and 2020.
The chart indicates KPJ Healthcare's net profit margin during a 3-year period. The net profit margin in 2022 will be the highest in the last 3 years. KPJ Healthcare's higher net profit margin in 2022 demonstrates that it is more efficient at converting revenues into actual profit. According to the analysis, the operating profit in 2021 was RM 253,571, while it was RM 283,176 in 2020, a gap of RM 29,605 between 2020 and 2021. According to the graph, the maximum return on assets hits in 2022. This demonstrates that KPJ Healthcare is more efficient with their assets, and their net income in 2022 will be higher than it was 2 years ago. According to the analysis, the rate of return on equity in 2021 is low since the net income obtained is the lowest compared to the other 2 years. As a result, we can conclude that KPJ Healthcare does not properly employ shareholder equity to generate profits for the company. Based on the chart, we can see that the earnings per share, EPS, for KPJ Healthcare's common shareholders was ERM 0.12, while in 2020 and ERM 0.19 in 2022. we can see that the profit rate in 2021 is only 0.07. Based on the provided information, it appears that the dividend per share, DPS, for a company's ordinary shareholders was 0 in 2020, 0.001 in 2021, and 0.003 in 2022.
The DPR was rather high in 2020. A high payout ratio often suggests that a corporation returns a sizable amount of its earnings to shareholders. This may be seen positively by investors looking for profit. However, it might also signal that the firm has limited chances to reinvest profits in expansion or that it is under pressure to preserve investor trust by paying out large dividends. From the chart, we can see that the price-earnings ratio from 3 years straight, which is year 2020, 2021 and 2022, at year 2020, is highest among all 3 years apart, which 40.3 times, and in 2021, we can see the price-earnings ratio decrease slightly, which is as much as 39.2, likely from the COVID-19 pandemic, which is spreading around the world and causing economic collapse in most countries. Finally, in 2022 times recorded the lowest amount among the 3 years. In 2020, the dividend yield was relatively high at 4.44%. There was a significant drop in 2021 to 1.9%, a decrease of 2.5 percentage points. In 2022, the dividend yield rebounded sharply to 5.71%, an increase of 3.81 percentage points from 2021. The high dividend yield in 2020 could be attributed to strong financial performance or strategic dividend payouts. Financial performance evaluation of possible causes of poor ratio and recommendations of liquidity ratios. 1. Current ratios. The current ratio is a measure of a company's liquidity and indicates its ability to cover short-term obligations with its current assets. Based on the previous chart, trends, KPJ Healthcare need to consider other factors such as industry conditions, market trends, management performance, and economic outlook before making any conclusive statements about the future stock market based solely on the current ratios. 2. Asset test ratios, quick ratios. Based on the quick ratio chart, it can be ascertained that the year with less capital expenditure is the highest at the time of the rate of return. In the year liability in 2020 is the lowest of the 3 years, which is as much as Rm 1,231,978, compared to 2022 as much as Rm 1,660,321, and shows a difference of Rm for 2,8,343. If you want a quick return, don't increase the spending rate unless the return is more profitable, according to the company's profit. Financial performance evaluation of possible causes of poor ratio and recommendations efficiency ratios. 1. Average collection period. The average collection period refers to the amount of time it takes for a business to receive payments owed by its clients in terms of accounts receivable. KPJ Healthcare shows that analyzing data from 2020 to 2022 demonstrates that the data for the average collecting period is increasing, which is a negative indicator with an increase of 18 days. One of the primary causes of this increase is an increase in account receivables, which is from 2020 to 2022, up by Rm 188,005, and sales Rm 266,953. This issue should be stabilized to avoid further increases in the average collection period. Following that, it might demonstrate a short collection time rate and have a positive impact on the organization. 2. Inventory turnover. ITO. Inventory turnover is the rate at which inventory stock is sold or used and replaced. A higher ratio tends to indicate strong sales, and a lower ratio to weak sales. KPJ Healthcare has experienced ups and downs over the past 3 years. It is expected to increase from 2020 to 2021 before decreasing in 2022. It is due to inconsistencies in cost of products sold and inventory. As a suggestion, the corporation should stabilize the increase in both items so that the inventory turnover is satisfactory. 3. Total asset turnover. The graphic depicts a sharp increase in total asset turnover over the course of 3 years. Sales and total assets are two factors that contribute to this increase. To maintain present performance, the company must enhance and maintain the increase in sales and total assets, because a company with a high asset turnover ratio functions more efficiently than competitors with a lower ratio. 4. Fixed asset turnover. According to the supplied graphic, the lack of these things is caused by low sales and net fixed assets. KPJ Healthcare must raise from year to year in order to increase fixed asset ratios. There is an increase from 2020 to 2022, which can demonstrate that the company has a good strategy to further enhance its position, and this should be maintained in order to boost the company's good fixed asset turnover. Financial performance evaluation of possible causes of poor ratio, and recommendations of leverage ratios. 1. Debt ratios. Debt ratio is one of the important components in a company to calculate the amount of debt borne by a company. Based on the chart and analysis of the debt ratio of the KPJ Healthcare Company shows that in 2022 the debt ratio is the highest because the total debt and the amount of assets recorded is the highest, and the debt ratio rate will increase if it does not get the expected return. It is recommended to reduce the total debt so that the debt ratio will be lower. 2. Debt to equity ratios. Debt to equity ratio is an important resource for every company. According to the chart and analysis of the debt to equity ratio of the KPJ Healthcare Company, of the 3 years used, the ratio to equity in 2022 is the highest and is 197.09%. The calculation method to get the debt to equity ratio is to use the total debt and the total equity. What is recommended is to increase the total debt and the total equity so that the debt to equity ratio increases, and the capital will be received faster as in 2022. The difference between 2020 and 2022 is 18.22%, while the difference between 2021 and 2022 is 22.15%. 3. Time interest earn. Time interest earn is one of the keys to the company's progress. Based on the chart and analysis of the KPJ Healthcare Company according to 3 years, namely the years 2020, 2021 and 2022, it can be seen that the rate in 2022 is the highest at 2.18. This is because the EBIT and interest for the year 2022 are the highest compared to the years 2020 and 2021. It is recommended that you choose year 2022 because it can guarantee the interest rate of the time to get compared to the years 2020 and 2021. The value in 2020 and 2021 is less than 2.0 and reduce the interest rate of the time to get the fast. Financial performance evaluation of possible causes of poor ratio, and recommendations of profitable ratios. 1. Net profit margin. The net profit margin is a key indicator of a company's profitability, and for KPJ Healthcare, it showed fluctuations over the 3 years. Analyzing the reasons behind these fluctuations, such as changes in expenses or revenue, would provide a more detailed understanding of the company's financial health. As a suggestion, in order to raise the net profit margin in 2021, KPJ Healthcare should minimize lease obligations. In 2020, lease liabilities were M69,224, but in 2021, lease liabilities were M76,745, a difference of our M7,521. KPJ Healthcare gains a higher profit return as a result of lower finance costs. 2. Operating profit margin, OPM. The operating profit margin reflects how well a company manages its operating expenses in relation to its revenue. For KPJ Healthcare, this margin experienced fluctuations over the 3 years, with an improvement in 2022. Analyzing the factors contributing to these changes can provide insights into the company's financial performance and management of operating costs. The operating profit margin is expected to shrink to 9.8% in 2021 from 11.81% in 2020. As a proposal, KPJ Healthcare should lower operational costs by including an internship, soliciting multiple vendor bids, hiring a freelancer, and so on. 3. Return on assets, ROA. Return on assets, ROA, is a financial statistic that measures how profitable a firm is in comparison to its total assets. ROA can be used by corporate management, analysts, and investors to measure how efficiently a company uses its assets to make a profit. As we can see, the return on assets in 2021 has dropped to 1.06% from 1.8% in 2020. As an example, KPJ Healthcare requires, for instance, lowering asset costs, reduce inventory expenditures by controlling inventory levels to reflect your sales projections. This is because excess inventory can raise asset expenses while creating no additional income. 4. Return on equity, ROE. A measurement of financial performance known as return on equity, ROE, is obtained by dividing net income by shareholders' equity. ROE is referred to as the return on net assets, since shareholders' equity is determined by subtracting a company's debt from its assets. The return on equity decreased from 5.03% in 2020 to 2.91% in 2021. This occurs as a result of the decline in economic conditions, brought on by the COVID-19 virus onslaught. As a recommendation, KPJ Healthcare should implement a number of initiatives, including boosting revenues while cutting expenses, enhancing efficiency, expanding asset investments while decreasing liabilities, or boosting dividend payments or equity buybacks. Financial performance evaluation of possible causes of poor ratio and recommendations of market ratios. 1. Earnings per share. Earnings per share can decrease if the profit, but it is calculated by dividing the net income available for common shareholders by the number of ordinary shares issued. As we take a look at the chart, we can see that the profit rate in 2021 is only RM 0.07, which is quite low. In my recommendation to improve market ratios, including EPSs, 1. Enhance profit margins. It is to focus on improving profit margins by effectively managing costs and negotiating better supplier contracts, and it can be optimizing pricing strategies. 2. Dividends per share. Indicates the amount of dividend payment that a shareholder receives for each share held. KPJ Healthcare did not distribute any dividends, as indicated by a DPS of RM0 in 2020. It could be due to various reasons. KPJ Healthcare may have decided to retain all earnings for reinvestment, or it may be facing financial difficulties and is unable to pay dividends. After that, KPJ Healthcare made declining dividend per share as DPS of RM 0.001 in 2021 and RM 0.003 in 2022 are decreasing over time. My recommendation to improve this, KPJ Healthcare should focus on improving its financial performance and profitability. It can also consider implementing a dividend policy and setting aside a portion of its earnings for distribution to shareholders. As a result of the analysis, KPJ Healthcare has incurred significant losses in 2021. This is due to the country of Malaysia and the entire world being assaulted by the COVID-19 epidemic in 2021, due to the order to shut down in order to prevent the epidemic from spreading, and causing economic activities to be unable to be carried out as in 2020 and 2022. The global economy has suffered significantly. The Malaysian ringgit has also fallen as a result of this. This has led raw material prices to rise, forcing KPJ Healthcare to pay high operational costs and not be able to return sales comparable with the cost invested. Finally, during the pandemic, the stock market on the Bursa Malaysia Stock Exchange plummeted as investors liquidated securities due to the projected economic impact of the virus pandemic. As a result, KPJ Healthcare will not receive a large dividend in 2021,